All right, let's get started. Good morning, good afternoon to all. Thank you so much for joining us today. My name is Omar Vizram, and I will be your co-host today. Just a few housekeeping items before we get going. Your microphone is automatically set to mute when you join. If you have questions for us as we present today, we ask that you please ask us these questions through the chat box at the bottom of your screen. We will be responding to questions at the end of this webinar, and we may not get to all of your questions, so we ask that you please share your email address with us along with your questions so that we can get back to you at a later date if we're unable to respond to your question during today's session. Today's session is being recorded, and we will send you a copy of this presentation next week, along with the materials that we will be sharing and discussing at the end. All right, let's jump in. As I mentioned, my name is Omar Vizram. I am the co-founder and head of growth here at Ankle. I co-founded Ankle after several years working at KPMG in public accounting. I'm passionate about the NPO sector and have the great pleasure of working with our diverse NPO client base at Ankle every day. Shirley Wolf is a CPA, CA, and part of Ankle's CFO and controllership services team. Shirley has worked with not-for-profit organizations for more than 25 years and is a seasoned board member. She regularly advises executive directors on financial matters. A little bit about Ankle. We co-founded Ankle in 2016 really with a simple problem in mind. And that problem is that you can't build a great organization without good books. Fast forward to today, we have about 300 clients across the country, 100 not-for-profit organizations, including a diverse group of charities, associations, a very broad group. We focus on what we call financial operations support, so bookkeeping, payroll, and more. And we also offer financial management services through our CFO and controllership services. I would like to acknowledge that Ankle's offices are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. A little bit about what you will learn today. First of all, understanding why a strong, adaptable budget is crucial for 2025. Identifying key steps to building a resilient and flexible budget. How to avoid common not-for-profit budgeting mistakes that cause financial stress. Navigating uncertain funding landscapes and economic risks. And implementing best practices to ensure financial stability in unpredictable times. This session is really intended to help you strengthen your not-for-profit's financial future. So why does a strong budget matter in 2025? Some of the answers may seem obvious, but let's dive into this a little bit. Economic conditions are unpredictable. We have some really big challenges in front of us. Uncertainty regarding inflation and interest rates, tariffs and supply chain disruptions increasing the potential to increase expenses and dramatically change our economic landscape. Uncertainty around government funding and potential policy changes as we look to the spring when we might have a political party change at the federal level. A strong budget and a strong budgeting process helps to ensure the ability to navigate funding uncertainty and cash flow challenges. It helps to bring financial transparency and accountability to funders, and it enhances decision-making and brings long-term stability. Budgeting is really more than just numbers. It is a tool for strategic impact. I know that many people on the call today have some experience working in the private sector. Many of you are board members that work for corporations and volunteer your time with not-for-profit organizations. And I think it's important to recognize that the budgeting process for a for-profit organization versus a not-for-profit organization are quite different. Not-for-profit budgeting is mission-driven, focused on program sustainability, It uses restricted and unrestricted funds. And ultimate accountability is to donors and funders. Right, we were talking about the difference between not-for-profit budgeting and for-profit budgeting. For-profit budgeting is ultimately profit-driven, focused on shareholder returns, revenues generated from sales and investments, and ultimate accountability is to investors and stakeholders. Not-for-profits must balance financial constraints while driving impact, and that is the big difference here. Let's keep going. In terms of budgeting roles and responsibilities, so who plays what role? And ultimately, the point here is the budgeting process is not owned by one person. It's quite broadly owned in the organization. It's ultimately created by the executive director and the finance and operations team, usually a collaborative effort, but ultimate ownership with the executive director. Input can come from various stakeholders, including board members, program managers, fundraising and grants teams, and final approval is given by the board of directors to ensure compliance and accountability. A collaborative approach really leads to a stronger mission-driven budget. So make this an activity where you engage all stakeholders and really bring their viewpoints into consideration as you build it. All right, let's get down to budgeting. I will now pass it over to Shirley.
Great. Well, thank you, Omar, and it's a pleasure to be with you and all of the participants on our webinar this morning. So we're firstly going to be looking at the different types of budgets that we see. But I'd like to take a step back firstly and really consider what a budget represents and the different types of categories of budgets that we have. So we normally think of budgets in terms of both an operating budget and a capital budget. And operating budgets are budgets that outline the revenues and the expenses that you're anticipating earning and incurring for a period of time. And that's typically for the next fiscal year. On the other hand, a capital budget looks at those types of outlays that you're expecting to make when you're acquiring capital assets, such as land, buildings, it could be IT or office equipment or such like. Those generally don't impact your revenues and expenses at the time that you are making the outlay, but instead they go onto your balance sheet. So our webinar today is going to focus primarily on the operating budgets. And within our operating budgets, there are other types of budgets. So the master budget is the overall budget for a particular fiscal period. So this will show you the consolidated view of all of the income and the expenses for that period. It's important to prepare these budgets with a view to the long-term sustainability of the organization and also to provide transparency to all of those who are your key stakeholders, so senior management, your boards, and others within your organization that need to have that view onto the future. We also have program budgets. So these track the specific program-related revenues and expenses only. So they would include the direct expenses to run that particular program, but also an allocation of administrative expenses. If administrative expenses can be allocated to the grant under your terms of your agreement. This will also help with the reporting to your funders. So ensuring that your budgets are aligned with your funding agreements and also with your chart of accounts and your accounting system will help you to report in a way that's very efficient and accurate and help you as you apply for grants in the future. Another budget are event budgets. So many not-for-profit organizations will plan to hold fundraising events during the year, and there may be one or perhaps more than one events taking place. It's a good idea to actually prepare a budget for each event so that you can understand the specific revenues and the expenses related to those events. And once you've had the chance to prepare the program and the event budgets, as well as the administrative expenses that are not specifically related to those budgets, and the unrestricted revenues such as donations that also underpin the budgets, you're then in a position to roll it up into the master budget. This is a good time to just stand back and make sure that the master budget is making sense, and also very importantly that it's aligned to your financial strategy. This is a good time to look at your overall financial strategy, which is often prepared for a period of 3 to 5 years. One can look back to see what's been accomplished in the past and also what you're anticipating that you need to achieve in the upcoming year. Even if your organization doesn't have a strategic budget, it's good to set goals and to communicate those goals to each of the members of the budgeting team that Omar spoke about a little earlier. So it's really important to take a step back and to make sure that your budget's aligned with your overall financial strategy or for your goals for the period that you're budgeting. Now, of course, the funding agreements are a very important part of your overall financial statements, and so they are also a very important aspect to focus on as you're preparing your budgets for the next fiscal period. As you no doubt very familiar with, your grant or your funding agreements often come with stipulations as to how the monies need to be spent. Oftentimes, budgets are actually embedded either within your grant applications or within your budget agreements. So you would then have a very clear outline as to the types of expenses the funds need to be spent on, and also if there's an administrative allocation within that budget. The agreements also specify the time period that those funds need to be used within, and so that's also something important to keep in mind. The reporting requirements also are important to ensure that you remain eligible to receive any holdbacks and also for future funding. So do again make sure that you're aligning your budget with the conditions in your funding agreements. So the administrative costs are also a great area to focus on and an important part of your overall budget. Within the funding agreements, the funders often set caps on what those administrative costs are. Some agreements will specify a specific overall dollar amount without providing any details, allowing organizations the flexibility to allocate administrative expenses as you wish. On the other hand, some agreements will be very specific as to the types of administrative agreements that you can focus on and may specifically cover items such as rent or IT costs. Some may allow for payroll costs for administrative roles as well. So I find it useful when preparing program budgets, not only to focus on the program budget itself, but at the same time build the budgets for the administrative expenses. Once the budgets for the administrative expenses have been incurred, you can then look to see what you can allocate to the different programs from your overall administrative expenses. I would recommend keeping things as simple as possible. So then taking the opportunity then where you have the discretion is perhaps just to select 1 or 2 different types of administrative expenses and allocating those to the particular program grants. This will really help to simplify your financial reporting and record keeping going forward. We've spoke about budgeting for a particular fiscal period, but another very important time to focus on your budgeting, and in particular your program budgets, is when you're looking to submit a grant application and you're required to include a budget as part of that application. This is a really good time just to pause and to make sure that you're allowing enough room in that overall budget for an administrative allowance. And I would encourage you just to review your past agreements and your past financial results for your grants. And that'll be helpful to make sure that you're setting an appropriate amount for an administrative allowance. I know in the past, many organizations that have provided funding have allowed around 10% as an administrative allocation in their funding. That's generally found not to be sufficient by many not-for-profit organizations. So targeting a higher amount is definitely a good idea. Do remember that underfunding your operations can hurt the long-term sustainability of your organization. So it's important to budget wisely. So when should you start the budgeting process? We recommend planning at least 3 months before the commencement of the fiscal year that you're budgeting for. Larger not-for-profits may want to start earlier than this. I recommend working backwards, knowing the date when the board needs to approve the budget, and then determining the sort of key dates for when the various team members need to submit information to you, and also building in enough time not only to prepare the overall budgets, but sufficient time to review the budgets and also engage other stakeholders, perhaps such as your treasurer or the board, where you feel you'd like to get their input on some key assumptions that you're making. You also want to revisit and update the budgets throughout the year. So don't set it and then forget it. And we're going to be talking about that a little bit further in the presentation. Also keep in mind that you're wanting to plan for contingencies and any unexpected changes in revenues and expenses. As Omar had mentioned, we're all aware of the very uncertain times that we're currently living in. And I think this is top of mind for many not-for-profit organizations. We also want to focus on what happens after the budget has been set and how we're going to go about maintaining and measuring that budget. One thing that I found is that it's often very helpful to retain that original budget that has been approved by the board. In some instances, circumstances may change so significantly that a board may request that management update the budget, and they may go through a subsequent approval process for the revised budget. In that case, you certainly do want to make reference to the latest approved budget by the board. But as events unfold during the course of the fiscal period, you may want to consider preparing a forecast. So this will take into consideration the actual revenues and expenses that have been incurred to date, and then adding to that the forecast for the remaining period of the fiscal period. If you are expecting significant changes, this is a very good practice to be implementing, and also to be presenting the forecast to the finance committee or the board of directors when you meet with them. So definitely see the budgeting and forecasting as a continuous process throughout the year. What happens then when you go over budget? Of course, a budget overage, particularly with respect to expenses, can increase the financial risks to your organization. So monitoring the actual revenues and expenses compared to those budgeted on a monthly basis is important, and this will help to prevent any unpleasant surprises. You also may want to build an emergency reserve to handle those unexpected costs. Many boards that I've had the pleasure of working with have created internally restricted funds, which they've typically referred to as a contingency fund or an operating reserve, to be there in the event that adverse circumstances arise for the organization. It gives them and management peace of mind that there is a cushion, a reserve to draw on in the event that the unexpected happens. Also recommend establishing a very clear approval process for unbudgeted expenses. again, you don't want to be in a situation where you're facing an unpleasant surprise where an unapproved expense goes forward with your organization that could be significant and place a financial burden on your organization. So do ensure that your internal controls, which are often documented in your financial policies, are there and they're clear and approved to all those in your organization that are authorized to incur expenses. We're now going to look at some steps in the budgeting process. So how you would actually go about the budgeting process from start to finish. So as we mentioned a little earlier, you want to take that opportunity firstly to focus on funding and your various sources of revenue. You may be in a situation where you know certain sources of revenue with certainty because you've entered into funding agreements or you've got commitments from particular donors. And that's really good to know. But you also want to be focusing on those areas where there's uncertainty. So perhaps you've applied for a particular grant or you've received pledges from various donors. It's good to actually be reaching out to those particular sources of funding to find out whether the decisions have been reached or to follow up on any pledges which, for which the funding hasn't yet been received. You also want to assess the reliability of multi-year grants. So oftentimes multi-year grants exist within government contracts, but they're typically clauses. They say that the amounts that are specified in agreements are subject to appropriation. So reaching out to the different government departments is also a good idea to get confirmation as to whether that funding is going to come through for you for the next year. I would definitely take the opportunity to plan for fluctuations in various sources of revenues. So particularly with respect to government funding, there certainly are possibilities that as our governments come under pressure with the likely tariffs that are going to come into place this year, is that there could be cuts to funding. And so you may want to just plan for various eventualities, such as possibly a 10% or perhaps a 20% reduction in those revenues. I would also recommend building multiple budgets, looking at different scenarios that could play out, including what you believe is the most conservative type of scenario. That isn't necessarily the budget that the board will approve, but it does give the board an indication of what perhaps a sort of worst case scenario could look like for the fiscal period. You also want to analyze historical financial data. So look back over the last couple of years to see if you can identify various trends, patterns, or it'll also help you to identify those recurring costs and what your various funding dependencies are. Although your budget may not necessarily reflect what has happened in the past, it often forms the basis for making those future projections. You also want to make adjustments for inflation, for rising costs, and for economic shifts. It's also a very good time to pause and to think about what you need to stop, what you need to continue with, and what you need to start. So, for example, as you look back on your expenses, you may identify areas where you could be saving costs or improving efficiencies to reduce the types of costs that you've incurred in the past and that you want to incorporate as part of your budget. You also then want to take this time now to forecast those revenues and expenses. So taking into consideration the economic risks that we've mentioned previously, also adjusting for any seasonal fundraising cycles. So for example, you may be holding particular events, not necessarily every year, but every second year. So making sure that you're being mindful of those cycles. And again, ensuring that your spending aligns with the strategic priorities for your organization. You're then in a position to start gathering input from your key stakeholders. So Omar mentioned earlier the budgeting teams that you would have put together, engaging department heads, program leads, and finance teams. So you would have hopefully set a budget timeline and then have the chance to meet with those key stakeholders and gather the information that they've prepared for you as part of your budget. Again, the budget decisions that are being made need to align with your organization goals and your funder expectations. And those should have been communicated to those key stakeholders at the beginning of the budgeting process. I would also be reaching out to the board at this particular point, or at least your finance committee or your treasurer, to make sure that they have an understanding of what some of those key assumptions are, the types of events that you're looking to host in the year, and really to get their views and perspectives on your overall budgeted revenues and the expenses. And this will help prevent any delays in your budgeting process. Having that all as sort of a broad team and various perspectives on your budget really does help to improve your overall budget and to make sure that you're making appropriate financial decisions. It also helps to ensure that you have the buy-in of your various program leads and department heads, because ultimately they will be accountable for the actual costs that they're incurring compared to the budget. We spoke a little earlier about the different program budgets and the events, and we do recommend that each program and each event has its own dedicated budget, even though they might be relatively small in the context of your budget as a whole. And also recommend that those budgets outline the restricted and the unrestricted revenues separately, so that you can identify the different sources of funding to support those programs. Once you prepare the consolidated budget, you're then in a position to present that budget to the board for their approval. Boards often want to check in with you on actual versus budgeted performance at least quarterly. Some boards meet more frequently than quarterly and like to have a checkup perhaps monthly or at each meeting that they're holding during the course of the year. So as mentioned previously, if there are any significant impacts to your organization as a result of economic factors or other particular circumstances, presenting those forecasts to the board as part of their ongoing monitoring is also a very good idea. Keep in mind again that a successful budget evolves with your not-for-profit needs. So here is just a summation of the importance of building a strong budget and things to keep in mind, some good takeaways for you in summary from today. So use accurate bookkeeping data to forecast realistically, and take that time to review the past to help you make decisions about the future. Ensure that your budgets are aligned with your strategic goals to ensure that you don't lose sight of the overall mission and those important accomplishments that you want to make during the period covered by your strategic plan. Definitely stress test your budget and develop some worst case scenarios. That'll be a helpful reference point for you and help you make decisions such as whether you need to focus on perhaps some new fundraising campaigns or generating other sources of revenue. Make sure that you monitor and adjust your monthly forecasts or results to avoid last-minute budget crises. And ensure that you have the full board approval and that you're in compliance with all of your funding agreements before you finalize those budgets. We want to ensure that you have a budget that helps you thrive even in these uncertain times. And I'm now going to hand over to Omar for the remainder of our presentation.
Excellent, Shirley. Thank you for that. Let's jump over to the next slide, please. All right. So first and foremost, I just want to emphasize that it really all starts with accurate books. Your budgeting process will not be successful if you don't have good quality bookkeeping processes in place. Our bookkeeping services now start at $500 a month. There are a few reasons why you might want to consider Ankle. One, we will deal with the compliance headaches, keeping your books audit ready, clarity for your board and funders. So we prepare your financial statements in accordance with accounting standards for not-for-profit organizations, so you will have the clarity throughout the year. We will make the year-end process seamless for you. And at the end of the day, we have a number of experts that really know not-for-profit accounting specifically. So Shirley and our team of controllers, as well as our bookkeepers working on your files, are very well trained in not-for-profit accounting specifically. And then also just to share some insights on our controllership and CFO services. This is the group that Shirley is in. One, we provide expert financial oversight. So somebody like Shirley meeting with you and your board, perhaps on a monthly or quarterly basis, to review progress, to review the budget, review the results of the organization. Strategic budgeting and forecasting support so we can help you build out the budget, engaging the right stakeholders, getting the right format in place, making sure that you are able to ultimately measure the results quickly and efficiently every month. Cash flow and risk management, we are having a lot of conversations right now in this area, so helping you identify and mitigate financial risks before they impact your organization, and ultimately being board ready. So having a board ready financial reporting package so that you can really leverage your board to help you make those strategic decisions. With Ankle's controllership and CFO services, you ultimately gain ongoing financial leadership that help you make proactive and better data-driven decisions. All right, now on to the fun part, the Q&A. So I do see that we have had some questions here so far. Now, these are good questions, and they might lead to some other points of discussion. So maybe I will just jump in and ask the first question, and this one would be for Shirley. Can you please suggest a template for unbudgeted expense approval process, for an unbudgeted expense approval process? And I think there's probably more to this answer, a few layers to it, but Shirley, any thoughts there?
I typically don't see a template being used for, excuse me, unbudgeted expenses. But what is important is that there are approval levels for expenses that before they are being incurred, that may be over certain thresholds. And that threshold would really be whatever you want to set that you feel is most appropriate to your organization. So for example, a threshold may be $500 or it could be $1,000 or even more. So there needs to be a process that those expenses, it could be something like a purchase order that needs to be used. And that can be used whether you're buying goods or services, that then needs to perhaps go through to the executive director, who normally has a very good understanding of the budget and would be able to identify whether that is a budgeted or an unbudgeted item. So I would ensure then that the costs that are over a particular threshold then are approved and identified as being unbudgeted. The board as well may set certain policies around also needing to approve unbudgeted expenses that are over a threshold as well. And that's usually a higher threshold than would be used by a sort of executive director level of approval.
Thank you. Here's another interesting one, Shirley. If an organization is going into a fiscal year without knowing exactly where all of the revenues will come from, do you suggest presenting a deficit budget to the board or increasing the donations or project grants line to balance it out?
That's a very good question. I do see deficit budgets, but I also see budgets where you are excuse me, increasing revenues such as donations or identifying perhaps other sources of revenue to ensure that you're either balancing the budget or you are achieving a level of deficit that is acceptable to your organization. So, for example, you may have incurred some surpluses in previous years, and it may be acceptable to you and your board to be spending some of those surpluses. Of course, as not-for-profits and as charitable organizations, we expect ultimately to spend the money that we've been given. So a level of deficit may be acceptable. However, you should be ensuring that your operations are going to be sustainable. So it may not be sustainable for you, for example, to have multiple years of deficits. So making decisions wisely about the expenses that you're incurring is also very important.
Another question here. Do you have recommendations for how an organization can build their contingency funds if all of their funder agreements are restricted? Would they request that a portion of their funding be allocated to the contingency fund?
In that case, no, certainly with respect to restricted funding, you wouldn't be able to build a reserve from that. That is required to be spent on the specific purposes that are set out by the funding organization or the donor. You would need to be building that reserve from unrestricted revenues, and those would be things such as your general donations, or it could be from revenues that you're raising through fundraising events. It could also be on investment income that you're earning from investments, if you hold investments and the investment income doesn't have to be spent on specific programs. So I would definitely encourage you to diversify your revenues. If you've got a very, very high concentration of restricted revenues, that may be a sort of flag for you to be thinking about how you can be generating more unrestricted revenues. That is important to be building resiliency for your organization.
Okay. Let's see what's next here. How do you really go about budgeting when there is so much uncertainty?
That's another good question. I always say to really start with what you know. So what you may know are grant agreements that you've already entered into. You, of course, those grant agreements may not necessarily align with your fiscal year. So those that are already in process, you would want to identify the revenues that haven't yet been spent, but as well as looking to head to the grant agreements that will be starting during the fiscal period that you are budgeting for. So also definitely start with what you know and then focus on what you don't know. And that is where it's a good idea to sort of be building in those different scenarios. So you may have, as I mentioned earlier, applied for certain grants, or you may be anticipating certain levels of donations, perhaps based on what you've received in previous years, but where you think there could be a decline perhaps, or maybe even an increase for the coming year. So look at various plausible scenarios for what you don't know and build that into a couple of different budget scenarios that you can then present to your finance committees or to your boards.
Okay, here's another one. What happens if the budget is approved and there is a sudden material change and you lose a significant amount of funding, let's say 25%? How should you proceed?
Yeah, so I think that's a really important time then to be preparing the forecast that I spoke about a little earlier. And that'll really give you a clearer picture then of what you really are anticipating for the next fiscal period. And then you may need to be making some decisions. So that could perhaps put you into a substantial deficit position, in which case then you're going to be needing to look at the different sources of revenue that you may, excuse me, and need to be generating to mitigate that loss. It's also then an important time for you to be focusing in on various expenses. That revenue may relate to a particular program, and unfortunately, you may be in a position where you're needing to cut back on, or perhaps even cancel the delivery of the program. And so you need to be gathering the information as soon as possible so that you can be making the decisions on a timely basis.
Okay, there is one question here on tools. Are there any tools that we can use in the budgeting process? I'll take that one. There are. We still see that because there are so many stakeholders involved in the budgeting process, and that assumptions come from so many different places, that usually Excel or Google Sheets, the dreaded Excel or Google Sheets, are still used as a starting point. That said, once the budget is finalized, it should most definitely be uploaded into your accounting system. So it is important that it is prepared at the chart of accounts level, as we said earlier. And then on top of that, you can have a system pulling the data outside of your accounting system to present better visualizations, better segments of the overall budget. There's a tool that we use called Spotlight Reporting. So if you are an Ankle client, we will actually deliver your budget versus actuals and different visualizations through this tool. We do see a lot of Microsoft Power BI used in this capacity as well. So there are tools, but that doesn't really replace the hard work that should be done around actually building a meaningful budget. There is one final question I see here. And so this will be the last one for today. When planning the budget and allocating administrative costs to different programs, would we just take the total projected admin costs and then divide it out amongst programs based on appropriate percentages, or keep all of the costs in one class and then at the end of the year do an interfund transfer?
I like allocating those administrative costs monthly. I'm thinking back to an example with a particular client that runs a program that's funded by the federal government, and there's a total allowance for administrative costs. So we know the dollar amount, and that particular organization has flexibility as to which administrative costs they want to allocate. They do incur rent for their main offices, and they've chosen to allocate rent expenses. So we know the full amount. Let's just say this is not necessarily the correct amount, but it's $15,000 for the year that they can allocate to this particular grant, and the grant is aligned with their fiscal period. And so we would simply take that $15,000, divide that by 12 to get the monthly allocation of rent. And so the rent expenses are initially booked to sort of an administrative class in QuickBooks. They use QuickBooks. And so what we do is we set up a journal entry to transfer it out of the administrative class and into the class that we're using for that particular grant. And so that helps to ensure that the financial reporting is kept up to date each month.
Excellent. Thank you, Shirley. All right, that's it for our questions for today. If we could just go to the final slide here. All right, so a couple of takeaways, a couple of notes, and we will send out an email next week, as I mentioned, with the recording for this webinar. Please feel free to schedule a free consultation with our experts. You can contact us right through our website. You can download the Nonprofit Budgeting 101 guide. We will be sharing a link to this in the follow-up materials that we send you. So this is a very comprehensive guide that we've prepared internally. It does include a lot of the information that we discussed today and a lot more detail on how you can go about the budgeting process. And please join us for our next webinar. We will be co-hosting this next one with Charity Village on March 20th. The topic will be From Surviving to Thriving, 10 essential financial tips for all NPOs to navigate uncertainty in 2025. Again, you can contact us. You can schedule a meeting with us at the link below there, www.ankle.ca/contact-us. Thank you very much for your time today. It has been so enjoyable presenting this to you today, and we look forward to seeing you soon.